It's 2025 and you must be ready to make your dream of owning a home a reality because you're here watching this. This is video 3 of my 4-part series to guide you through the home buying process. Today, we're going to be diving into how to find the right lender and loan for your situation. If it's your first time here, or you've been following this series, please hit that subscribe button so you don't miss any of these important steps. And let's get started. When it comes to financing your home, finding the right lender and loan is one of the most crucial steps. The first thing you'll want to do is understand the different types of loans available. One of the most common options is a conventional loan. These typically require a higher credit score, often 680 or above, and usually like a larger down payment from 5 to 20%. The big advantage is that they often come with lower interest rates and no upfront mortgage insurance premiums if you put at least 20% down. Now, let's talk about FHA loans. These are popular amongst first-time buyers because they allow for lower credit scores. Sometimes I've heard as low as 580, and smaller down payments are part of this loan too, starting often at 3.5%. However, they require mortgage insurance premiums, both upfront and monthly, which can increase your costs over time. For example, on a $250,000 home, the monthly insurance could add like $150, $175 or more to your payment. You'd want to talk to a lender to get those specific numbers, but I just want you to know that that's part of the game. For those who qualify, VA loans, or DVA, Department of Veteran Affairs loans, are a fantastic option. They're exclusively for veterans and active military members and offer benefits like no down payment, no private mortgage insurance, and competitive interest rates. Lastly, there's USDA loans, which are aimed at buyers in rural areas, which here in central Minnesota, that applies to a lot of us. Like VA loans, they don't require a down payment, but they do have income limits and are only available for homes in eligible locations. If you're considering a property outside the city, this could be worth exploring. And if you live in a smaller city, quite often it's an option to explore. Now that we've covered the loan options, of which there are more, but these are the most common that I see, let's move on to shopping for lenders. This step can save you thousands of dollars over the life of your loan, so it's worth putting in the time. Start by researching at least 3 lenders, which could be from a bank or a mortgage broker or a credit union. Guess what? If you don't know where to start, guess who's got a list of lenders they can send to you? That's right, me. When comparing lenders, pay attention to more than just the interest rates. Look at closing costs, loan origination fees, and whether there are any points you can purchase for a lower rate. For example, one lender might offer a slightly lower rate but charge higher fees, while another might have a higher rate with lower upfront costs. They'll provide you with calculators and whatnot so you can compare the overall cost of the loan over time. You also want to make sure that it's a lender that you can connect with on a personal level. And if you're not working with me, make sure that it's a lender that your agent has worked with before or feels comfortable working with, because that's going to make all the difference in the world. Trust me. Now, one of the most important steps in this whole process is getting pre-approved. This is where the lender reviews your financial situation and determines how much they're willing to lend you. A pre-approval letter not only gives you a clear budget, but also shows the seller that you're serious about buying. To get pre-approved, you really need some simple documents like pay stubs, tax return, bank statements, and proof of any other assets. Now let's talk about working effectively with your lender. And the key here, I can't emphasize this enough, is communication. Be upfront about your goals and ask questions if you're unsure about anything. For example, if you're concerned about monthly payments, ask your lender to explain how different loan terms, like 15 versus 30 years, will impact this budget. Another tip is to ask your lenders about lock-in options for your interest rate. Mortgage rates can fluctuate daily, so locking in a rate can, well, protect you from increases while your loan is being processed. Finally, Remember that finding the right lender isn't just about the numbers, it's about that relationship. You're building a relationship with someone who understands your goals and can guide you through the process. Take your time and do your research and choose a lender who feels like the right fit for you. If you're ready to take the next step or have questions about loans and lenders, reach out to me. You can use the comments below, DM me on one of my social medias at BjornToSell, or head over to bjorntosell.com to connect with me directly. And don't forget to look in the description below to find that free home buyer's guide, the Bjorn to Sell Home Buyer's Guide, because it's packed with tips and tools to help you navigate your home buying journey. Let's make 2025 the year you achieve your home ownership goals. Next week, in the final part of this series, I can't believe we're already there, we'll dive into finding your dream home. I'll show you how to prioritize your needs and wants, how to work with an agent, and how to make a strong offer. Please don't forget to like and subscribe to this thing. It helps me out a ton. And I can't wait to see you for part 4, the final part of this great series next week. Until then, be kind to one another.